Welcome to the Finance and Future Tech podcast, which we get to air on Thursdays at 8 p.m. East African time on Ijaz Radio. But you can also access the entire list of episodes that we get to do on the show wherever you get podcasts from. All you have to do is search for Finance and Future Tech, and you'll be able to access all the episodes that we get to feature on the show. So this week we are talking to an amazing lady that I had a chance of interacting a while ago last year, and that's when we were doing 40 days for the fintechs, the Tanzanian chapter. And she does many things because she's the founder and managing partner at Macho Adjusters. We shall talk about that. Then she's the founder and director at Macho Technologies Limited. We also talked about another product that she had called Thamani that we shall also get into. But Helen Lukundo Chonjo is on the show. Welcome. How are you doing? How is everything going for you this year?
I'm well. I'm ecstatic. The year has started.
Yeah.
A bit January moves fast and slow.
Yeah.
But I am generally well. Thank you for having me on your show.
Yeah, glad to have you on. So we talked about you being the founder and managing partner at Macho Technologies Limited. Can you talk to us about that first?
Yes, definitely. Macho Technologies is a technology company, a sister company to another one of our companies called Macho Adjusters. Macho Adjusters is an assessment firm, a loss and risk assessment firm founded in Tanzania. And as an extension, we founded Macho Technologies to work on tech endeavors in the insurance and risk management sector. So out of that, we birthed Thamani, which we had been working on for over 4 years. And it is an extension to a service that we offer in the insurance industry, which is motor appraisal. So like I said, when we were having a conversation last year, we are meant to bridge the gap between vehicle owners and the insurance coverage that they buy. Usually, when you go and buy your insurance, you are certain that whatever value you have put, that's what you're going to be compensated for. Turns out it is not the case. Usually, people forget to, or maybe do not know the actual value of their vehicle, and as a result, they get penalized during a claim, and that beats the whole purpose of insurance. We are trying to increase our insurance penetration in the country, and having consumers have a low morale because they have disputes while they're having claims is a huge challenge. So we are solving that problem. We're minimizing the cost and reducing it by over 90% as what we charge right now at Macho Adjusters. And so it is now affordable and readily available for everyone because it is online. And we hope that in the future, it will be able to make everyone confident about insurance and also make sure that everyone is really 100% insured for what we would call the bare minimum of our property here, which is your motor vehicle.
Oh, yeah. So you talked about Macho Adjusters and then Thamani. So these two work together to do that.
Yes. As Macho Adjusters, we are licensed and regulated by a regulator called TIRA to do motor valuations, or rather we call motor appraisals. So we have created a tech side of things where we have automated the process that we used to do manually. And by that, we have reduced the cost, like I said, by over 90%. We would charge an average of around $70 per vehicle to do a manual appraisal for one vehicle. But right now, it has gone down to over $1, and it would take an average of like a minimum of 3 days to do an appraisal of one vehicle. Now you can do it anywhere you are. So by that, we are working together. The two businesses are working together, each one on its side. Macho Technologies is on the tech side, and then Macho Adjusters is on the assessment side because they are the insurance experts in this case.
Okay, and you have a background though working in insurance, right?
Yes. So my journey is very interesting. I studied undergraduate. I have a degree in information technology, which is IT. And after I finished my university, like he's any other university graduate in my time, we were just looking for work. You want to finish university and you're not very picky, whatever you get.
Yeah.
So I was out there just looking for a job. And then I said, maybe in a few years I will turn back to tech, but for now, get me anything. So I did 3 interviews. One of them was in an insurance broking firm. And then I got in one in the insurance firm. And before I knew it, it was 10 years. So I had this vast knowledge of insurance. I decided to get a certification on insurance as well. So I started knowing insurance and risk management first by practice, and then I went to school. But then I also have a background in technology because I have a degree in information technology. So I kind of have the best of both worlds. It worked out well in the end.
Yeah. Because I see at the end now you decided to create solutions for some of the challenges that you saw in the insurance space. So now, which brings us
Yes.
to what they usually term as InsurTech. I like that we keep phrasing these things. So when it's financial technology, so it's fintech, then InsurTech, then clean tech, and then there's all the. So we have all that.
There's just a whole variety.
Yeah. So how would you describe the current state of how these two worlds are merging in terms of technology and then insurance? Because with technology, you're trying to make sure things are simpler, and on the other end, the traditional way insurance has been done is they take quite a while to get things done, and it's not an easy thing to change. The struggle still goes on to try and make adjustments in that industry because they like the traditional ways of how they have been carrying out their operations. So how is technology, for example, what you're involved in, trying to bridge that gap, and what do you see as the status as for now?
Well, I would say there is no one rounded answer for that. Insurance is one of the most rigid industries throughout to adopt tech. But we should understand that in most insurance policies are legal documents. It's the same as trying to include tech in the legal sector. That is very hard. There is a very wide part of it that needs to have a human touch. So insurance documents are all legal documents. They're written legally, and that's why most people would want to use brokers who understand. Insurance is not the kind of thing that you get taught in school, let's say, so you would understand and if you purchase it and without getting an assistant, you would get just like that. So I would say, yes, the industry is lagging behind generally in the world, in my country, but so much so we should understand that there are so many things that are very hard to automate when it comes to insurance. A policyholder who's buying insurance needs to understand the terms of their policy. They also need to feel like someone is there when they're claiming. There is that element where if I've had a loss, if I get a computer telling me press next, I might not feel as attended as going to an office and meeting someone who would sympathize with me and empathize with me. That is a touch that technology cannot do as far as insurance is concerned. There's also no one size fits all as far as, like you say, claims. Each claim is very different. So in their defense, there is a reason why they're lagging behind, but sometimes also they end up lagging behind. Well, as a sector, I would say we end up lagging behind even in areas that we're not supposed to. So tech that simplifies how we do our work, tech that simplifies how the customer experience, that is one that we should adopt easily, definitely. And we are still lagging behind. Tanzania, I would say, as far as East Africa is concerned, has taken a huge leap as far as technology is concerned. I think we have automated so many things internally. There is now a way in which our regulator and insurance companies and other players are sharing information. So we have taken a huge step in the past 5 years. But generally, we still have work to do. There's still so much to do.
Yeah. I think as long as, for example, when you came up with Thamani and you said it took about 4 years to get to this point where you are right now and it's accessible to people. Can you explain why there was that time lag and why it took you almost 4 years to get to that point?
Yes, first, the technical bit of things. The core role of Thamani is to offer a valuation of vehicles. So we offer the market value. That can be very tricky. Most of our vehicles in Tanzania, as would be in many East African countries, are second-hand vehicles.
Yeah.
So you do not have a log or a roster somewhere saying, okay, this is a Toyota Corolla this year, and so this is the price. I would buy it for $10,000. You would buy it for $5,000. Another person would buy it for $7,000. So being able to merge all that data to create a formula that works, I would say that is the reason why, again, Thamani is the only our tech solution for this challenge in the country, because that formula that's where our money is. We spend so much time creating a formula around it, studying the data and being able to automate it. When a human is doing the same task, we just use our logic saying, okay, so you bought it for 7,000. It is this way, it's that way. It's easy to come to a conclusion. So the technical part was one of the biggest parts. Then including the technology wasn't very hard. It became a bit harder when we were now trying to integrate it with other systems. Again, that was a challenge because the way the systems work, you have built an overall system, and now to make it compatible to these other systems that are running concurrently, now that also became a huge challenge. But all in all, I would say the technical part, which is the formula, took about maybe 3 years of our work. Then the rest was the tech bit.
Yeah. I think that's but I like also where that is going, that finally the solution is here now, and I hope even other things can get to be automated, most especially in the insurance space too. And because for finance, I see most of the investment that happens with either startups or people that get money in terms of funding for their initiatives. It's usually into the finance sector, fintech, and I think it's still leading even as far as 2023 goes. I think I saw the report, and fintech is still having the most investment, and then everybody else comes after that. So with what other opportunities do you see in that are currently untapped in the InsurTech space?
I would say value addition services. Solutions in tech solutions in the insurance industry are crowded around selling insurance to consumers.
Yeah.
But these are the same consumers. You're not going to sell anything more to them if they're not satisfied, if they don't understand what they're buying. So if you look at a wide range, it's how to sell, digitizing selling, how to get your policies online. So many people are selling insurance, but nobody is thinking that this is the same consumer who needs so many other services. So I would say any value addition service to the consumer is a plus. Education about insurance, how to sort out claims, which is a big part. Like we said, like what Thamani is offering, solutions that would otherwise require human touch or would take a long time or be costly, that the consumer needs, that they don't know that they need. So this, for me, I would say this would be the most untapped areas. However, so many solutions are just centralized around selling insurance, which I think for most of us in the industry, we really need to think outside the box.
Okay. And since we are getting into trying to simplify things with using technology, so there are things that you can't escape now, which is now artificial intelligence. Then you have now blockchain and how all that Web 3.0 is developing. So how do you see that being integrated within the InsurTech space? Or even what opportunities?
Data.
Yeah. Yeah, you can go
ahead. So I say insurance is data. And for the longest, we also are a bit rigid as an industry because we do not have data. So let's say you have your motor vehicle and you're buying insurance. For here in Tanzania, whether you're a good user of your vehicle, a terrible user of your vehicle, whether you travel long distances and I travel shorter distances, meaning I reduce the risk of getting accidents, we pay the same rate. So if we have the same vehicle, we pay the same rate. If I'm going to renew my vehicle next year and I did not have a claim last year, I'm still going to pay the same amount. So with that being said, that means we don't have enough data, consumer data, um, just data that we share around the industry. We can't offer individualized or personalized services that are very lucrative in the market. Imagine if you were able to buy insurance for your vehicle. I'm just coming from home and I am going to town. I just have like you would buy, say, electricity here at home. You have your 1,000 T shillings, you have your $1. That's how much I have now. I will buy insurance for this much. But we cannot do that without data. We can't do that. We can't offer better deals. We can't offer better services without data. Also, on the side of the insurance companies, so many times we have seen insurance companies pay claims twice. A vehicle has gotten an accident, one insurer has paid, this person has gone, has stayed a bit, bought insurance with another insurance company, the same vehicle is paid because there's no centralized data. There's no system that works to say, you know what, this vehicle was written off. This insurer has paid it. There's no place where you'd go and check. So information is power. Data is power. So whether we like it or not, collection of this data now will be the source of revolutionizing insurance in the future, in my opinion.
Okay, and so when you look at, because you have these solutions, and then we get to the customer experience, because I know you hinted about it earlier on. So how are these innovations improving the overall experience of the customer when they are getting exposed to whether it's buying insurance or even going for claims and all that?
Currently, speaking in the case of Tanzania, I wouldn't speak for the globe, but I would speak in the Tanzanian context. I think for now, where I would say the consumer is seeing a better customer experience is as far as getting their documentation. And we are currently paperless as an insurance sector. So before a customer would have to come, they would buy insurance for their motor vehicles. And then they would get a sticker, which is a paper that you stick on your windscreen. And then that would be what would show for the year, and you would probably wait a week to get your policy document and just your receipts and what you paid for. So right now it is instant. You go to an insurance company, they enter your details, you use your phone, you check to see if it's valid. Nobody is leaving with any massive documentation. You also get your policy document instantly. Another thing is it's giving customers, I'm looking for the word for it, a bit more trust for the industry, because now you get to be able to check what the insurer has booked. There were a lot of cases where a customer would pay for one thing and then would be given a document, because now these documents were not entered in any system. A document showing one thing while they're insured for another thing. And then only when you get a claim, you know, oh, I wasn't properly insured. Now you validate your insurance. There and then, someone tells you, all right, we're done with your purchase. There is a site by the regulator. If you go and put in the details of your insurance, it gives you a summary of what you have bought. So there's no fraud. It has reduced the fraud. It's given customers more faith in the industry. and just it's made it seamless as far as getting your documents, as far as making the payments, and mobile money included in there, so you can just always pay with your phone. So that's I think that's where we have improved. Buying insurance online, not so much,
Yeah.
not so much, but yes.
Yeah, absolutely. Only thing I've is in Uganda. In Uganda, I'm not sure about Tanzania yet. I want to know, that is instant. That has been sorted. You can get your insurance. You get your sticker. You put back on your car. Why do they still use typewriters? That's what I want to. That's what I want to know, especially in Uganda. I have no idea.
I think they love their typewriters. So you also have this instant cover notes, stickers, and you buy your insurance then and you have it.
Yeah, yeah, for the car.
But it's still a manual part.
Yeah, they still have to go to the typewriter, and then you can pay with mobile money or go to the agent, but then they still have to literally use the typewriter to type out.
Oh, interesting, interesting, interesting. We love our old ways. We love our old ways.
Yeah, so yeah, that's how it goes, and it's interesting, but it's done instantly. So you have your sticker and you put it back, you put it right there and then and you're good to go. But now with all this, of course, there is the regulatory framework now that you have to operate within. So how do you see the environment evolving for most especially what is happening within InsurTech? Because the regulation that happens was all before all these innovations came in. So how do you see regulation evolving and aiding more innovations within the space, but at the same time also making sure that the space is also properly regulated?
Well, again, using the context of Tanzania, just in the past year or so, we have had new laws around tech companies or tech solutions operating in the insurance space. So for us, these laws were not there. However, as of a year or so, for any tech company to operate in the insurance industry, then they need to have a license. So not any tech company can come and decide, I want to provide a solution. That way, the regulator makes sure that they follow the laws, what we call them IDPs, insurance digital platforms. So these IDPs are now regulated by our regulator, and there is a bylaw passed on how these are meant to operate and what documentation and what insurances they need to have in place to make sure that the consumer and the insurer are protected, the insurers who are using this tech solutions. So I would say it's going to evolve as we go. Also, we are the younger generation that is coming into office and holding these positions. So in the next 10 years, there is a shift, and more people who are tech savvy are going to be sitting in those decision-making seats. It's not going to be as hard to make regulations around it that support it. We have an environment that I would say really supports tech evolutions, tech disruptions in the industry, though in a regulated manner. So because there were so many solutions coming up, then there needed to be some sort of regulation. I think that's also good because if you're not serious about it and you're just testing the waters, then you would probably not. There's now also very little scam. You have to. There's very stringent regulations on how to enter the insurance space as a tech player. So you cannot just make something out of your garage and then just come and sell it out, and then before you know it, there are 100,000 people who have bought policies that are fake. At least for the case of Tanzania, you can't do that. So I think regulators are also becoming more and more aware of how much tech can improve the industry. And as such, they're evolving with the time, and regulations will also evolve with time. Bylaws are helping currently, and I think that's the most immediate way of regulating the tech industry.
And another important factor, of course, with with this solution, as far as these solutions go, is the need for collaboration with the traditional insurers, of course. So, do you see that improving, and what is the current status though of the relationship between, let's say, for example, like Thamani and probably other traditional insurers, and how is that going?
The way that this is a very tricky position. So, you know, the policyholder is paying a certain amount. The insurance company is holding the liability, and so they're the ones who are getting this amount. There's so many players in between. So, as much as whatever tech is doing is simplifying life for this person who is buying insurance, it's taking from the insurer's cut. Anything in between here. So, if you're a broker and you're broking the business, you'll get a percentage of what this client is paying. So, that is deducted from what the insurer is going to make. So, it's bittersweet, honestly. I would say, as much as the insurance companies want to see clients have a better experience, this is also a business. So they have bottom lines and they have cost cutting plans within the companies. So it can become very tricky. So that's what we're facing now. Almost all the players we have gone and have a chat with have said, you know what, this is a brilliant idea, we need it. But then how do we integrate it? Because if we are saying yes to integrating it and giving it as a value addition to our customers, then it's taking from our cup. And at the end of the year, this is what we need to make. So how do we make this work? So there is that bittersweet situation back there. Maybe it needs to be opened up such that the client themselves can decide, well, you know what, we want to pay more. This is how much I would pay, but I want to pay more for this additional service. A situation like that would make insurers more comfortable in adapting this. So I would say what is keeping insurers from collaborating as quickly as they would want to is the fact that these insurance companies are businesses. So anything that is new, anything that they add is, whether we like it or not, a cost. And that is why I said, when we are looking at solutions that will disrupt the future, we need to look at solutions that will make people have more customers. So if we're educating people on the importance of insurance, then we have more consumers. The insurers are making more money. They do not mind paying for the tech, because then they could say, okay, from the time my clients started receiving these texts, we have added our clients by 10x. So we really do not mind paying this amount. So I would say that is what is hindering collaboration, honestly. They are willing, but when it comes to the bottom line, it just becomes very hard.
Yeah, a lot of people in there will be cut out, the brokers and all that. Yeah.
Yes.
Because, like, for example, now what you do is, if I sign up, let's say at Thamani, I can easily evaluate that there is enough information for me to evaluate my car, to value my car, and see what I need to pay and what the cost will be. But there's also, in the business, there's also someone who actually benefits from explaining that service to you.
Exactly. Yes.
Okay.
Exactly. So it is bittersweet.
Yeah, it's like, do we want to...
It is bittersweet.
Yeah, because you want to improve the experience of the customer, but then the traditional people that are providing the service are like, we have all these other people that have these other jobs that, you know, you will be cutting out. So yeah, I can see how it can be a bit tricky, and but nonetheless, it will be, as time goes by, because it will be something that we will have to adjust to, and maybe they'll come on board later on and see how much more of a benefit it is to reduce on the time someone has to spend. Just like how they made in when you pay for a car, you can immediately get your policy and a sticker is on the car, rather than taking 3 days. You maybe would, or like payment through different channels, pay through your mobile phone, pay through the bank, or any of those solutions. So I hope that maybe the changes will happen as fast as they can be. But we wait to see that happen.
Mm.
So, speaking of disruptions, are there any other emerging technologies that you believe will be significant as far as the improving or making the InsurTech sector better?
I think pay as you go is a big one. Pay as you use, being able to buy bundles of insurance rather than annual insurance, that is a big one. I think when we reach there, we will have more people purchasing insurance. Most Africans, most Tanzanians earn what they earn daily. So they make the money, then they use it. If you ask them to pay for something annual, it's too far ahead. It is too far ahead. I don't know where I'll be 1 year from now. I don't want to buy anything that is 1 year. It's a 1 year guarantee. So pay as you go, I think, is a big one for Tanzania, and I think it's a big one for Africa. We should understand that disruptions for the Western world don't normally work in the African context. Mobile money, for example. We use more mobile money than cards as far as payment is concerned. So solutions for Africa are very important. So I would say pay as you go. I would say leveraging of customer data to give them better deals. That for me, I think is just one of those inventions that will disrupt the insurance sector in the African context. Maybe being able to also offer no claim discounts, which means you get discounts on your usage as you go, or you get some sort of rebate, which is like a refund. That also could be a big disruptor. For all of that, we need data.
Yeah.
For all of that, we need data. Yes, as much as we could have the technology without centralizing the data, that would be a challenge. But yes, those are the two areas where I think could be very disruptive in the InsurTech.
Yeah, absolutely. So, of course, you talked about data, but lastly, what I would ask on that is, what role do you think does data privacy and security play in development and implementation of InsurTech solutions?
A huge part. A huge part. Everyone's trying to protect their data. That is if people do not feel protected with their data, then that is a problem. So I think it plays a huge part, and that is why, in the context of Tanzania, for instance, we have regulations saying, you know what, this is the cybersecurity insurance you're supposed to have. As a tech solution, you need to also have covered yourself just in case you get sued for that. So when consumers feel like as though their data is used well and is safe, then they will become more and more willing to purchase insurance, let's say online. There are so many solutions here in Tanzania right now where you can buy insurance online. But I would tell you, people are still writing emails to buy insurance. People are still going to offices because nobody wants to put their information out there and then just interact with the computer, not knowing where this data they input went. And there's still that kind of stigma around, we don't know how protected we are. Is this real? Is it not? So I think it plays a very, very huge part in giving the consumer confidence that this is the right way of purchasing your insurance without worrying about how much their data is protected.
Yeah, and on that note, that brings us, of course, to the end of the show today. And guys, wherever you get podcasts from, if you're listening to this live on the radio, wherever you get podcasts from, you'll be able to get more of the entire conversation. You can go back and listen to it because on the radio it just airs once, but on demand you have it whenever you want or at your own leisure. So you go to any podcast app of choice, search for finance and future tech, and you'll be able to listen to any of the episodes. So lastly, how can people interact with some of the solutions you have, which is Thamani and also Macho Adjusters? How can people reach out to you?
We have websites for both. Our website for Thamani is www.thamani.co.tz. You get all the information that you get there about Thamani. For Macho Adjusters, it is www.machoadjusters.co.tz. We have also outlined all our services there, and you can get more information about the risk management and loss management services that we offer. Thamani is also on Instagram _ThamaniTZ. So you can also get more information about Thamani there. Otherwise, our emails, which are also outlined on the website. So when you go on the website, you get all the information that you need.
Okay. And what are you excited for this year?
Breaking ground with Thamani, actually. So like I mentioned, our biggest challenge was moving from an early adapter stage to now starting to see Thamani gain traffic. So we have quite interesting plans to be able to push it out there in the market. We want people to know about it. We've also noticed that most of the people who are not using it it's because they do not know about it. So we have exciting plans with Thamani, and we want by the end of the year to have reached a much bigger audience than we are serving now.
All right. Helen, thank you so much for joining us today on the show.
It's an absolute pleasure.